this brings us to the shocking chart from China. This chart really started in the early days when it first entered the World Trade Organization. So it is the relevant period of time. And look at what is happening to the 10-year government bond yield. It is collapsing. And we know that PPI inflation, well, is negative. So there's deflation from the PPI point of view. Consumer price inflation is pretty non-existent. What this tells us is that the government probably doesn't mind that its currency is depreciating. It's depreciating right now, and it's hitting the lows in terms of depreciation that we've seen, the lowest points relative to the dollar. So this suggests to us that they're trying to reflate their economy, but they can't do it if they can't get property going. That is such a big part of the economy, and it's 75% of consumer savings. So they are speaking a little more vociferously now about fiscal stimulus and modest monetary easing. But I think they're probably pretty shocked by what's going on here. This is the lowest in the government bond yield since China entered the World Trade Organization. And it basically says not all is well there. Now, what are they doing in response besides some of these easing measures from a policy point of view? They're really pivoting to innovation. And as we've mentioned many, many times, innovation is inherently deflationary if it's technologically enabled. And there are some surprises coming out of China. DeepSeek, their large language model, is surprisingly performant on chips that are not the most advanced out there. So China is innovating around some of the restrictions that have been imposed on it by the U.S. government's national security concerns. So partly that could be a reason this is going down, but I do think that there is much more of a true deflationary bust caused by overwhelming debt caused in turn by the property sector in China, which will take years to work out of.